Hey guys, what's up, how's it going? My name is Rob and welcome back for another video. In today's video, we're going to be doing another stock portfolio review from Blossom. So if you guys haven't noticed already, I actually haven't posted for about a week and a half on my channel, and that's because I was actually away on vacation. I actually took a trip with my family to Cuba, and we kind of just sat back and relaxed on the beach, and it was nice to actually unwind and take some downtime. So that's kind of where I've been for the past week. It's been a lot of fun and it was really nice, but now it's time to kind of get back into the swing of things and do some more videos. So today we're going to be doing a stock portfolio review, and if you guys are brand new to the channel, if you haven't seen this before, I basically go on Blossom. There'll be a link to sign up for Blossom if you guys want. You guys can use my link in the description of this video. You guys can set up a free account, go on Blossom, find my portfolio, and look at the recent post I did where basically I do stock portfolio reviews, and anybody who wants to get their portfolio reviewed, all you guys have to do is sign up for Blossom, leave a comment on that post, answer the questions that I leave for you guys, and I'll pick you guys. I'll go through them one by one, and what I'm going to be doing is I'm going to be reviewing everybody's basically stock portfolio on there. I'm going to try to do as many of these reviews as I possibly can over the next couple weeks or so. So if you guys want to get your portfolio reviewed, make sure you leave a comment on that post. Alright guys, so the first portfolio review we're going to be doing is Luke Hamo's portfolio. I hope I'm pronouncing that correctly. So Luke is 23 years old. He's been investing, I'm going to assume this is since 2019, so it's about 3 to 4 years for right now. And his goal is to save and invest for the futures with his TFSA, RSP, and personal accounts all on Blossom. So they must be linked in his portfolio, which we will check in just a second. And his questions he asked here is, how can I improve and see more growth in my portfolio? So we're going to be focusing on that today. And which stocks would you move on from and keep for life? So that's another good question there. So the next step here is we're going to take this stuff all into consideration, and we're going to jump over to Luke's portfolio and check out his holdings. Alright, so here's Luke Hamo's portfolio on Blossom. You guys can go ahead and give him a follow if you guys want to see his portfolio and his posts. Scrolling down here, we can see his portfolio pie on Blossom. So here's all the stocks, and just in a second, we're actually going to go through all the individual stocks and look at his portfolio allocations. So we're going to start off at the top here and kind of work our way down. And then after I give a quick little overview, I'll kind of talk about the different holdings and go in further details. So the first stock we have, which is going to be the biggest holding, is going to be Bank of Nova Scotia. This represents about 22% of Luke's portfolio. And then we have Apple stock coming in at second, representing about 14%. So these two stocks actually add and make up the bulk of the portfolio. Going downwards, we have VFE, Vanguard S&P 500, which is about 10%, as well as Tesla. And then we have our first couple Canadian stocks, which are some banks. We have TD, BMO, CIBC. We also have the VSB Vanguard S&P 500 Canadian hedged version of VFE. And then we got some other ones here, which are some newer stocks. RHT, which is Health Technologies Incorporated. This is the stock that I'm actually not familiar with. We're going to have to take a peek at that one later. But then we got RBC, VDY, Air Canada, ZQQ, Lightspeed, Weed, and then UWMC Holdings Corp, which is just some small holdings at the bottom here, which we'll kind of review really quickly here. But overall, Luke does have a long-term dividend portfolio, and he's looking, like I said in the video previous, for growth, and he wants to get some opinions on when to hold stocks and when to let go of them. So we're going to talk about that as we go further through the video. So if we go over Luke's goals, we can see that they're actually pretty solid. His goal is to invest and save money by putting it into his TFSA, RRSP, and his personal account. So that's a very good idea. And Luke, you're a young guy, you're making some good choices there, so definitely max out that TFSA and that RRSP. You'll have to look at your situation and kind of figure out which one's the best for you. But if you can focus on those two accounts, you're going to do really well, and that's a really great strategy, especially for somebody as young as you are. So going on to the question part of the video, Luke's main question was, how can I add more growth inside my portfolio? And because this is a more of a dividend focused portfolio, I'm going to focus on how you can add growth from a dividend investor's perspective. Of course, you could add more growth-based companies like, the tech stocks and different things like that. You could add more smaller caps. You could focus on companies that don't have high dividend yields. You could focus on the S&P 500, all that basic stuff. But from this video perspective, I'm assuming that Luke's talking about how can I add more growth inside my portfolio from a dividend investor's perspective. All right, so the first thing we're going to be focused on when it comes to increasing the growth inside a dividend portfolio is going to be a few basic features here. And like I said, because this is a dividend-based portfolio, we're going to focus on how we can add more growth from a dividend stock perspective. So the very first thing I'm going to focus here on is going to be stock growth. Stock growth is a big part of things that a lot of people don't think about, and this is the stock value growing over time. So I pulled up Bank of Nova Scotia here. I have it on the screen, and I have it comparing to the S&P 500 to just use as a bit of a benchmark. So we have we'll look at let's go over the past, we'll go since 2010 here. and we're going to kind of basically see how it's performed from the S&P 500 from a growth perspective of total returns. This will take things like dividends and everything into consideration. Now, if we look at Bank of Nova Scotia, it's going to be this blue line here. So we can see this blue line, and the S&P 500 is going to be the black line, or the total returns is going to be the gray line. The green one at the bottom is going to be the stock growth. The blue one is going to be the total return. And this is for Bank of Nova Scotia. And then at the top here, we have the same for the S&P 500. If you scroll into the end here, we can see that overall Bank of Nova Scotia, and the reason why I'm using Bank of Nova Scotia is because it is one of the largest holdings. So I'm going to kind of use it as an example. Like, it's important to understand when it comes to your biggest holding stocks here. So if we go to the end here, we can see that the Bank of Nova Scotia total returns is 101%. Over the past, I'd say about 13 years or so, while the S&P 500 is total returns is about 300%. So that's quite a big performance, bigger performance from the S&P 500, and most of that is coming from the stock growth. So it's always important to consider the stock growth. We can also look at something like RBC, for example. The past 5 years, RBC just from stock growth, not considering the dividend, is 37%. And when it comes to Bank Nova Scotia over the past 5 years, we are actually down negative 11%. Now, again, this is just this period of time. Things might change in the future, and keep in mind, Bank of Nova Scotia does have a pretty high dividend yield, which brings me to the next point. The next factor that's going to increase the growth of your dividend portfolio, or your dividend stock, is going to be the yield. A stock that has a higher yield is going to net you more income on a regular basis. You can put that back in. It's going to be part of the overall return, right? So if you can find a stock that combines good stock growth with good yield, you can actually get some nice bang for your buck there. So that's an option you guys can look at. Bank of Nova Scotia obviously is probably, I think, one of the higher dividend yield stocks, sitting at 6%, which is quite a bit actually, in all honesty. And so that's also a nice way you can increase some of that growth from a dividend perspective. The third and final reason, which I think is also a big part of things, is going to be the dividend growth of that stock. So I pulled up on dividend history. We can see how stocks have been performing in terms of dividend growth rate. So Bank of Nova Scotia, because it has a high yield, is going to probably most likely have a little bit of a lower dividend growth rate. Now, because the dividend yield is higher, smaller amounts in dividend increases are going to give you more yield, but at the same time, you're going to have less growth over time. So what I basically am saying here is that if you have like a 6% yield, it'll have lower percentages in terms of dividend growth, but that growth is probably going to go smaller and smaller over time, especially as they have a higher payout ratio. The payout ratio of Bank of Nova Scotia is about 56%, so it's a little bit on the high side. It's still not high, all things considered, but for the banks, it's kind of a little bit on the higher side. Most of the banks kind of sit around that 40% to 45% range right now. Keep in mind, a lot of the banks did get hammered a little bit over the past year or so, so we gotta keep that in mind. But Bank of Nova Scotia kind of has had a few dividend increases here and there. You guys can check this out. You can look at all the dividend increases. They usually, I think, typically have 2 per year. But if we go over the long term, the past 3 years, and these are just rough estimates, you're going to see about a 3.5% average yearly dividend increase. Over the past 5 years, it's about 4.87%, which is 5%. And over the past 10 years, a 6% average dividend growth increase per year. Once again, that high yield is going to give it up a higher percentage, but it's going to have lower increases. So if you're really looking for growth, one of the big things you can do is trade a higher yield stock in for one that has a lower yield, or even like a little bit lower, but it has more growth. So we could look at a stock like, for example, if we go back to dividend history, we could look at like TD stock, for example, just to use an example of a bank. TD definitely has a lot more consistent dividend increases. The yield is a little bit smaller at 4.8%, but you're getting much more dividend increases. So if you hold it for a longer period of time, that's going to compound and grow. We can also look at more extreme examples like ATD, for example. Now, this typically isn't a dividend stock, but we can use dividend increases here from a growth perspective to really increase the growth, right? Because they have so much room to increase those dividends. Payout ratio is about 15%, which is pretty low, and we're seeing massive dividend increases. So once again, dividend growth or trading some higher yield stocks for ones that are lower yield but having lots of growth over the long term can really jump up your growth overall. But again, yield does matter, and if you can find the sweet spot where you can find stocks that have decent yields but also have good growth rates, you're going to definitely have some good success there. And overall, after reviewing the portfolio and looking at the allocations, I think the portfolio is pretty solid overall. One thing I will comment on is you do have some pretty high exposures to some certain stocks, like Bank of Nova Scotia, for example, as well as Tesla and some other ones. There's nothing wrong with that, but just kind of keep in mind that if you have high exposure to these stocks, your portfolio is going to it's gonna like kind of matter how well those stocks do. So if you want to add more growth inside your portfolio, you might want to add more exposure to some more growth-based companies, or look at some of the higher holdings that you have and cut them back a bit to add more growth-based companies, like maybe the S&P 500, maybe add some more higher dividend growth stocks. It's really up to you and how you do it. But if you have some more of your higher holdings that have higher dividend yields and don't have as much growth overall, you're going to see less growth inside your portfolio. So that's definitely something to think about. And the last question Luke has inside his portfolio is, how do you know what stocks to keep, which ones to move away from, and which ones to hold forever? So this is a bit of a tricky question. And for me, the approach is pretty simple. If you're buying an overall market ETF, like, you know, the S&P 500, I hold the VDY, I hold the VFE, and I hold XIU. The reason why I buy these funds is because you really can just hold them forever and you don't have to think about it. So it's super easy, like, and that's the reason why I like them. So obviously the ETF approach is there, and that's the idea, is to buy into the overall market so you don't have to think about those things. When it comes to individual stocks, of course it gets a little bit more trickier, right? Like, how do you know when to buy a stock, and how do you know when to hold it forever? For me, I like to focus on good quality companies that have been around for a long time. So think like Canadian banks, a lot of big brands, and I tend to stay away from more of the smaller caps or the stocks that don't have a good history of returns, because I'm not comfortable holding them. So for me, if you look at my portfolio, it's very conservative. Like, I have a lot of good quality companies that I think people would look at and be like, yeah, of course, that's going to be a pretty solid investment. I have very little speculative stocks, and I have a lot of ETFs and a lot of good quality companies because I really want to see those returns, and I'm pretty comfortable. Like, you know, it's a good chance that they're going to do well. So that's something you're going to have to ask yourself. You got to look at the history of a company, look at things and be like, you know what, do I want to hold this long term? And if you don't, a lot of times investors don't feel comfortable because they don't like the returns of the stock. They're not comfortable with it because, like, it just doesn't look good, and they're not happy with the success. So check out the history, check out the returns, look at the total returns, look at the growth, look at the dividend histories increases of these companies, and decide for yourself, you know, do I like the way things are going? Do I like the way this is doing it? And if they're not, then that's probably something that you need to move away from. So that's probably my best advice from that. I know it's very simple, it's really basic, but honestly, it's a very fundamental approach, but it works really well. And of course, there's other factors that you can do, like you can dive into the financials of companies, you can look at stock reports, and if you're more into picking stocks and doing the research and putting the time, you can do that. But I just want to always say this, at the end of the day, nobody can predict markets and nobody really knows what's going to happen. So it's up to you to decide which approach is right for you. Alright guys, so that's it for today's video. I hope you guys enjoyed it. If you guys have any thoughts or anything you want to share with Luke's portfolio, definitely let us know in the comments. If you guys want to follow Luke on Blossom, definitely check that out. And if you guys want to sign up for Blossom, you guys can do so as well to get your portfolio reviewed. There'll be a link in the description of today's video. Hope you guys enjoyed it. Hope you guys enjoyed the portfolio review, and I'll be putting some more out over the next couple of days as well on some different platforms as well as on YouTube. So take care, have yourself a good week, and I'll see you guys later.